Hi, this is Stephen here from Share Navigator with a quick update on the euro dollar. So, as you can see, a big move since last Wednesday with the Federal Reserve announcement. So, here we had the Fed announcement right here, and then as you can see, the dollar has strengthened substantially against the euro since. So, we're down here now at about 118.70, and just last week it was at 122.50. So, what happened? The Federal Reserve basically didn't change much about their language. They did say we're now going to talk about tapering. And what does that mean? Well, since the pandemic, nearly every central bank in the world has been buying assets in order to basically artificially keep interest rates low in order to stimulate the economy and stimulate stock markets, etc., like that. Now they're talking about easing off in that end of things. But the second and most important thing really was what they call the Fed dot plot. And that's where it's like a straw poll of all the Federal Reserve governors and what they think in terms of interest rates. And the amount of Federal Reserve governors who think interest rates are going to rise sooner than anticipated went up substantially. So you're now looking at two rate hikes in 2023. So 2023 is 2 years away from now. You might be thinking, why is that such a big deal? Well, this tapering program or the reducing of the asset purchases would need to start pretty quickly in order for them to be able to raise rates in 2 years' time. Does it mean that rates are actually going to rise in 2 years' time? No. But the market has to take a signal of something, and at this moment in time, investors are starting to react to that. And we have a euro on the other side where the central bank has already said there's no way we're going to ease off our bond buying program until at least next year. So therefore, you're getting that stronger dollar. So is it a case of buy dollars now? And the answer to that is no, because we've hit this support area. So previous support here, you can see. So we may get some sort of a recovery here. Who knows? We'll have to wait and see how it plays out. So you wouldn't be jumping in buying dollars just yet. And then this is really the key area here. So this is kind of just at about 117.10. If that gets broken to the downside and we start trading below here, the recent weakness or uptrend in that dollar is over, and the trend is broken. And then you could see a stronger dollar continuing all the way down to here. So really this 17.12 area is a key area in this euro dollar currency pair. Just if we clear off all of those lines here, just another thing to watch here. Here's let's call it a high, and this high is lower. So this may or may not be the start of, again, the dollar in a longer term strengthening pattern. We'll have to wait and see. So if this gets tested again and we fail and we come down and take out this low, it's this low here is the key one, then we're actually into a trend of a strengthening dollar, and that trend could continue all the way down to this level down here. So it's really an important time for the euro dollar. I wouldn't be jumping in buying the dollars just yet. You're going to have to wait and see how the market plays out over the next number of days. If if the dollar does go into this 120 to 122.50 range in here again, I'd be a buyer of the dollar at those levels. And the reason being, I just think you've got your indications from the central banks, respective central banks, what's going to happen going forward, and I do think it equals a stronger dollar over time. So for me, I'd be a buyer of dollars over that 120 mark, but just not right now, because we may get support here and may rally in there, and you might be able to get the dollar at a better price. Okay, this is Stephen from Share Navigator with a quick update on the euro dollar. Thanks and bye for now.